Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and I'm here in Canada, and what better time than to talk about the United States, because, look, there's some huge problems that we've been forecasting for years, especially regarding when we're talking about interest rates. Obviously, there's been this push to bring interest rates or prop them up as much as humanly possible for the coming economic collapse, which out of desperation, they're like, let's pull them up as much as possible, and, well, if you look at past history, you look at rate cuts in the past, you look at coming very close to negative interest rates, and at the rate, I think it was 5 to 5.5% that they dropped rates between 2008 and 2012. At that rate, where would we be now? Like negative 2.5?
Well, currently it would be you'd be around 2.5 to 3.
Yeah, so negative 2.5 to negative 3%, which is crazy. And of negative interest rates are a thing that for a long time many people laughed at, but we've seen it happen in many countries around the world. And now, we talked, I think, a week or so ago about how Australia was one of the first in this domino effect of bringing their interest rates down. And, well, lo and behold, it wasn't too long after that we see stuff like this from CNBC. Wall Street's top economist, Ed Hyman, sees a rate cut in July and more to follow. And as this article goes into, Evercore ISI chairman Ed Hyman sees an insurance rate cut in July and more to follow as the inverted yield curve is making him quite uncomfortable. And I quote, "I think they are going to ease in July and ease a couple of more times to try and get yield curve positive again, and also put some insurance in the system for the trade issue," Hyman said Friday on CNBC's Squawk on the Streets. The top economist said the yield curve inversion, a reliable recession indicator, is the number one risk weighing on the market. The yield on the 10-year Treasury yield remains lower than the rate on the 3-month bill Friday. And I quote, "Every time in the past it has worked. That's a precursor to recession. It makes me quite uncomfortable, but it has to stay this way for another couple of months before it gives a real signal," Hyman said. Hyman, who has been ranked the top economist is in Institutional Investors' annual poll for more than 3 decades, believes the Federal Reserve should come to terms that a trade deal between the U.S. and China is not coming anytime soon. And I quote, "I think the Fed has to go on their supposition that the trade tensions could go on for quite a while." It's sort of a cat and mouse between the two. And that brings me to this next article out of CNBC as well. It says, "Here are 3 reasons why a Fed rate cut won't save Wall Street." And as the article goes into, as President Donald Trump's trade wars rattle investors, Wall Street has reached for a security blanket, new Federal Reserve rate cuts to offset the economic damage. That measure of financial comfort could come as early as this week, as the Fed meets for 2 days and issues a statement Wednesday. If not this week, nervous investors and the Trump White House hope for a rate cut in July or perhaps September. But senior economists from both political parties say it may not work that smoothly, even if the Fed says yes, for 3 reasons. And that poses risks to America's decade-long, quote-unquote, recovery as the 2020 presidential election draws nearer. Now, number 1, it says tariffs and tariff threats have shaken confidence among trading partners and businesses, as shown by the Business Roundtable's eroded second quarter CEO Economic Outlook Index. Demand-side stimulus from Fed rate cuts can counter contradictory effects of tariff costs, but not the harm to the animal spirit of corporate America. Monetary policy can modestly help, but is not an ideal tool, says Glenn Hubbard, Dean of Columbia University's Graduate School of Business. That negative effect from policy uncertainty is likely to remain even if the present disputes with China and Mexico are resolved. This uncertainty is blunting part of the investment gains that were made possible by corporate tax reform. Number 2, the more concrete reason is actual disruption to existing business patterns. Trump boasts that his tariffs have imposed a price on China by causing firms to leave, but that imposes costs on those firms as well. And I quote, "There are important supply side effects as global supply chains become broken that cannot be addressed with monetary policy," notes Harvard's Greg Mankiw. Like Hubbard, Mankiw once served as top economic advisor to President George W. Bush. And then finally, number 3, lags in timing. The economic bug that tariffs induce can set in before the Fed's medicine starts working. Rate cuts, and I quote, "Rate cuts take about 12 months to have substantial impact," explains Jason Furman, who chaired President Obama's Council of Economic Advisors. Tariffs could be much faster acting, so that could be a real problem for the economy in the second half of 2019. Economists expected a 2019 slowdown even before Trump declared himself a tariff man last December and set about proving it. After a burst of stimulus from the late 2017 GOP tax cuts, growth tapered in the later months of 2018 and fell short of the administration's full-year projection of 3% or higher. So I think this is really interesting because obviously you get the Wall Street take on it, and then you get, well, our take on it, which is a bit different than the Wall Street take. Imagine that. John, what do you think? What do you think as far as the forecast goes going forward? Interest rate cuts. What are the chances of us seeing that in the next few months?
Well, I think it's highly likely to actually see it because the economy is really struggling. If you have taken a look at a lot of the economic indicators that are coming out, they are really starting to go in a downward trend. So that's telling me that different indexes that are looking at manufacturing, all this stuff is starting to struggle, and it's impeding in the economy. And now, of course, the Fed has been selling their assets on their balance sheets. Yeah. Meanwhile, actually, I was looking at the banks. They have bigger balance sheets. And one of the major reasons why the banks still have bigger balance sheets is because of one little nation, which is the United States, that have just passed $1 trillion deficit for the government. You think if the economy is doing so great, you should have next to zero in a deficit, but that deficit that has been increasing ever since Trump got into power. Now, he's not at the same level as Obama was when he had to bail out the whole economy, but you're actually getting there without having a crisis. So it's starting to show that it's getting really bad in the economy.
Well, and I have to mention something that seems quite circular is this notion of, all these problems of central banks, the problems they create, and then government coming in and implementing more government to somehow get around the centralization, which causes the Fed to go, oh, well, we need to centralize this more. We need to manipulate this a little bit more and tweak that. And it just seems to be a perpetual circle of problems. And it's hilarious to watch these guys. Oh, well, this caused the problem in the first place. So maybe if we use this in a different way, the same thing. And this also takes away from a lot of, people have been saying Trump's a Fed critic, and maybe in the past he was more so. Him and, the Stephen Moore guy, which he's trying to get into the Fed. But
well, it worked better for him anyways.
Yeah, but as far as him criticizing the Fed, it's more like, oh, well, we need to lower interest rates. I mean, Trump is, as I've seen some people mention it recently, is Keynes on crack in a lot of ways, because we have a guy who's really promoting the idea of centralization, and then you hear all these people, Trump is anti-Fed. No, he just wants them to do this instead, and he's putting his fist down, do this instead. I mean, that doesn't make him anti-Fed. That just means that he wants the economy centralized in this other way. Pick your cancer, pick your poison.
Yeah, no, totally, Josh. It's all about the way that you can manipulate the economy to your best that you can have for you and your buddies is really turning into a big fascist Donald Trump. Yeah. You got to say it. No matter how much some people love Donald Trump, any people that get power will turn into a tyrant over time.
Or not even them, it's the people that control them, because they don't even have any say in the whole matter.
Yeah, no, exactly. So it's all about this control grid that they created. But then the problem is you have constant more debt that you have to create, and they're driven themselves in a hole. Now we are at 22.3, almost $22.4 trillion. And it's not stopping anytime soon. It's $1 trillion every year right now. And then if you get a crisis, you probably will see that deficit jump to like 3, 4, 5 trillion. And not just that, you're going to see when the pensioners are starting to pull money on a big scale now, you're going to have to see the programs, the $100 trillion, over $1 million per taxpayer in the United States that they actually owe to or have promised to pensioners that is not going to probably come in a lot of money as people thought. You might get 25 cents on the dollar maybe, or something like that. And a lot of people relied on that. They were stupid enough not to save up money, or maybe they just didn't have any money because they were taxed. And the United States is not that heavily taxed compared to other nations like
Norway,
Canada, and Norway, which is like raped on a daily basis. But they have a serious issue. You look at the write-downs that will come very soon in California and Illinois. All these other, Hawaii is struggling. Like all of these states are struggling too, because everybody's gotten into so much debt. And this is like so funny, Josh. It works on a historical basis where we have this debt addiction that we create into the monetary system. But then at the peak, because you run out of people to borrow to, that's the problem. And nobody could ever pay down that interest rate that just lies on top of everything, because that doesn't exist. So you just got to keep on printing more and more debt in order to pay that off, which is not going to happen. But yeah, it's just a big Ponzi scheme, Josh.
Well, and it creates that level of dependency that we've been talking so much that debt creates. It perfectly works out for the state and the banking system that work hand in hand. But I also have to mention, you mentioned pensions there, and finally I'm starting to see some mainstream media for the first time, after we've been reporting on it for more than 2 years, this specific stat where you look at pensions worldwide are looking at a shortfall of about $400 trillion by the year 2050, which is more than 4 times the world's GDP, which, by the way, most of the half of the GDP seems to be government-based. But anyway, that's a whole other story.
Yeah,
but what kind of GDP? But we're looking at shortfalls, and then people who are born in 2007 are expected to live to about an average age of 103. How is that going to work out, guys? I mean, when you get down to it, okay, labor force participation rate, hiding the employment numbers, taxing people to pay for people for I guess half of their lifetime at this point, more than half of their lifetime, hiding inflation, all that kind of stuff. How is that going to work out when it gets down to the brass of it? When you end up with a $400 trillion worldwide shortfall in pensions, then you get riots in the streets, you get pitchforks, you get torches, or whatever the 2050 equivalent is of that. But I mean, that is huge, guys. And what do you see? We see a lot of desperation. We see a lot of this debt. People are expected to depend. I saw in Bernie Sanders' economic constitution or Bill of Rights or whatever.
What economic constitution?
I know, it's ridiculous. Actually, no, it was plagiarized from Stalin's economic constitution. Anyway, whole other thing. But it was so crazy because it's talking about, people have the right to their retirement funds and all that kind of stuff. And it's like, wait a second. Well, government's getting involved. What it does is it creates dependency. People are like, well, instead of saving for myself, instead of actually building my own wealth over time, saving my own money, it gets stolen from me, put into this thing that I'm supposed to trust with the banks and the governments. I'm supposed to just trust that they're going to pay me after. And then you end up with this huge problem of, well, there's a massive shortfall, and oh, sorry, we can't pay you, and everyone's broke and everyone's in debt, and then baby boomer generation dies off. So then suddenly you have this vast amount of dependency from millennials who have been depending on their baby boomer parents and everything, who are huge spenders into the economy. It just creates such a huge domino effect, and it goes perpetually forever. And what happens? We end up more in servitude, because populace in debt is a populace in servitude. It's as easy as that. What do you think?
Well, yeah, of course it is. And when it comes to the whole pension scheme and everything that they put together in the United States, it's called the 401k, RSPs in Canada, just different versions everywhere you are in the world. But the thing is, my financial advisor that I work with, he's very different from everybody else. He calls it a racket. Yeah. He calls it the racket between the banksters and the governments.
Canadian Ponzi pension plan in Canada.
Yeah, and also the RSPs too, because they funnel people into that, while the bankster rape them with fees and money there as well. And then the government gets to take 30 to 50% on the back end. You got to be smart here. You got to get into plans where you actually can, one that I have, I could just lend out of the plan and pay zero taxes. That's how you should do it as well. Get out and avoid those taxes, because it's ridiculous the rape that you will go
legally
if you stay in those government plans. People got to understand here is that we are getting funneled in, and like sheep or cows to a slaughterhouse, and We don't know what's coming. We don't understand that the banking system is on the verge of collapse here. They're so close. Like, remember in December what happened, how Mnuchin came out and Trump came out and said, yeah, everything is fine. Go out and buy stocks, Trump says. Meanwhile, it's not back up at the levels it was again. It's really struggling to get back up there. And another thing is the bonds, the United States government bonds, is in a sell-off. On a trend level, so it doesn't look very good for the United States. It's kind of hit its peak as an empire with their currency, and now you're just going to see a constant decline, and it will be rapid. What we got to understand is, as soon as the trust in the US dollar, completely get eviscerated, when people see that the dollar, just wait until the next crisis, people will see that they're just printing millions upon trillions upon trillions, maybe even quadrillions of dollars. Who is going to trust that the US dollar will keep its value? Of anybody, even the regular Joe on the street? People are going to wake up to the reality. And then what do we got to understand? Any hyperinflation or any collapse in currency's value happens within just a year. That's the time frame. People don't understand that, it's just going to be like over a long time span. No, it happens in an instant, because it's all about trust. When that trust in debt and fiat we trust, when that breaks, that is the end game, and that's when the US dollar will collapse quite fast. And also, we talked about inflation, Josh, how they hide inflation. And if you look at just here in Canada, I did all the numbers, and the official number was 2%. Meanwhile, they printed just for M0, which is just cash and coins in circulation, 40% increase over the last 10 years. That's 4% on an annual basis. Yeah. And then you looked at M3, that was 9% on an annual basis. So we looked at, where's all this money gone? Well, in the stock markets and in the housing markets, to try to make people feel rich, because they believe that your house is an asset, or the fake paper that you go and get at Wall Street.
Well, artificially inflating certain markets, which is what kind of got us into that position in the first place. But I need to mention, though, also that where we're heading with this, because there seems to be a desperation move. It seems to be going in the direction of a cashless society. This 100%. Idea of creating a system where, look, I don't actually think they'll be able to do it, but let's put it this way, and I said it a lot of times before. If your money's in the bank, it's not yours, it's the bank's. If your money's always going through the banks via digital transactions, legal tender laws, by fiat, by law, then, yeah, you're completely owned by the government and the banking system, which puts you into perfect servitude to them, even more so than you already are. And we see that in Sweden, we see that, Japan, China is a huge one. But here's the thing. I don't think the United States, out of their desperation move to enforce everyone or put everyone under that blanket, under a completely cashless umbrella, 100% cashless, I don't think that they are working fast enough as far as the economy is coming up on its inevitable end. I mean, it should have happened years ago, but they pushed it off. There was never a recovery after 2008. It was just money. It was all fake. Like Robert Kiyosaki's book, fake. It's all fake. But I have to say, though, with that said, the U.S. government, the U.S. Monetary system might not be ready for this. They might not be able to do this fast enough. But you know who will? Well, let's see. That those people that Mark Zuckerberg went and helped with their little system in this little place that you might have heard of it, China, where our videos are banned. By the way, all of YouTube videos are banned. China, the place where they have created this vast facial recognition system, social credit scores, track everyone's movement everywhere they go. Just can tell people if they can fly, can tell people if they could eat at restaurants based on their credit score. Oh, you said something bad about the government? Well, your credit score is going down, and now cops are walking around with goggles on that could see people's faces and put up their credit score above them. It's so crazy, it's beyond Orwellian. And they look to be to take over the United States as far as their empire goes in the next few years. So them in India in second place for population, but people aren't really buying the cashless thing as much as in India as they are in China. So this is a huge problem going forward, and that brings us to the final question of this report. John, the currency reset. Everyone has been asking me, what do you think about the currency reset? What's going to happen? What do you think?
Well, there's a couple outcomes. There's that they go to a cashless system on a global scale. They could even implement the SDR in that system, but they just devalue all of our currencies. The US dollar becomes devalued, let's say like 80-90% or whatever, it's worthless, right? And then you get new e-currency that's on a blockchain, which that is actually proof by the Project Jasper that Canada's Project Uniper that Singapore has had. That's actually blockchain platforms that they're going to use for the cashless system. So that is coming. If you don't believe that that's here, that's what's going to happen. So yeah,
centrally planned blockchain.
Yeah, centrally planned blockchain cashless system where it's backed by the SDR on the top that just runs around. Like nobody would ever touch those SDRs other than the big corporations or the governments that use it between each other, and then do a whole bunch of criminal activities as they always do with their fiat currencies. Then there's a second outcome that we could be lured into the banking system by a complete collapse right now, and they won't bail out the banks. They won't even bail them in. They would just say that, oh, there's a new bank over here, a new banking system, a government-run banking system, and if you want your money back, you can come over to this new cashless system, and we'll give you your money back. But if you don't, you lost your money. Sorry, buddy. And that was actually Simon Dixon that told us that, and that makes sense as well. Then there's one more whole. There's four things. So there's one more where they could go to gold standard, which the gold standards that they even talk about isn't even like 100%, and it's government run. That's the problem with
print more IOUs than they have gold, like always.
Yeah, exactly. Like, have any gold standard worked throughout history? No, it hasn't, because they could still print money, and then they have to the gold standard worked. No, it was you printing money that didn't work. Like, it's the government corruption that happened, and it wasn't the gold standard itself. But the problem is you should never have a legal tender gold standard in the first place. Anyways, then there's the scenario that I see, and I hope is the most hopeful, Josh, and we talked about this a lot of times, which is a decentralized free market type of system when all currencies collapse and people are just like, screw the government. We had enough of this corruption, this Ponzi scheme that's been going on for centuries, millennia.
Which we've seen a bit in places like Venezuela as they went into hyperinflation. They're like, screw the government. We're going to do whatever we want. The U.S. government and their own government have been trying to overthrow their abilities to compete currency, but they're trying.
Yeah, and people are so afraid. It's like, India was looking at banning cryptocurrencies or imprisoning people for using cryptocurrencies. Yeah, that was Zimbabwe imprisoned people from using gold and silver back in them. Nobody stopped doing it.
But good luck enforcing it. It's ridiculous.
Yeah, exactly. It's garbage. It's like the when they confiscated the gold. We talked to David Morgan and others about the gold confiscation that happened. Well, most people actually kept that gold and had it at home. Nobody wanted to give that away they weren't stupid.
It reminds me of when people, when government tries to come in and take people's guns, then everyone's stockpiling guns and gun sales skyrocket. Yeah, when the government comes in and tries to do that kind of stuff, people simply, it actually empowers the side that's being attacked. China tried to ban cryptocurrencies as well, and people bought more cryptocurrencies than ever, and it just grew and grew and grew, and people try to use that as an excuse, like, oh, well, they might try to ban it. So a lot of things are banned. Cannabis was banned for a long time, and its heyday was when it was banned. So I mean, it's just like, I don't know. I actually think that they can do whatever they want out of desperation, but it's like when your parent says, don't stay up late watching TV, and it's like, oh, well, now I want to do that. Yeah, don't drink before you're 18. Oh, maybe I'm going to pay a homeless guy to buy me beer. Yeah, I mean, it's just one of those things where people naturally rebel against these kinds of authorities because they deep down know it's wrong. Deep down, they know it's illegitimate. Deep down, they know that they're dealing with a criminal racket. And they're like, I can take care of myself. I can rule myself. I can be my own human being, unrestricted by the slave racket that we're all on.
Josh, it's waking up.
Yeah, and it is. And it's waking up fast. And a few solutions for everyone as we kind of go out of that crypto thing, because of course blockchain can be used for good or evil like anything else. Food could be sustaining yourself. It could be McDonald's. It could be pure poison. It doesn't matter. It's good or bad. You could do good or bad things with basically anything. So anyway, I want to finish this off by saying you are the change you wish to see, folks. So when it comes down to it, food, water, shelter, self-defense, you're not gathering things for the toughest guy on the block. And of course, you must be responsible, free, sustainable. Don't depend on others and you will be free. Don't obey this system. You don't have to obey it. It's a shadow on the ball. Disobey. And then, of course, gold and silver as wealth insurance, as it has been for millennia. And that's our opinion. That's not investment advice. But of course, it's not meant as an investment anyway. And then
history told us that anyways.
Yeah, exactly.
Let's listen to history.
Yeah, his history is worth looking at. And too bad more people don't. But the governments erase our history and revise it. So it's kind of difficult anyway. But then there's obviously the cryptocurrency, properly, fundamentally useful, decentralized cryptocurrency and blockchain infrastructure technology. Do your own due diligence. Most are terrible, but some are great and some are changing the world forever. So you have to look into that yourself. But anyway, we're going to finish this off because this was a long video as per usual. But they're interesting subjects and we got to go over them. And there's more solutions.
I hope.
Yeah, I think so. And there's more solutions than there are problems in the end. So anyway, rule yourself, folks. Decentralize everything. Stop obeying. Be responsible. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Like what you see here at WAM, don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we're so heavily demonetized and censored and shadow banned. It's getting really bad, folks. If everyone just gave $1 single a month to say Patreon or our Subscribestar, where we do subscriber-only content, we could really get out of this rut that we are currently in as YouTube tries to stifle independent media and prop up the mainstream media. This is really important. This is one of the most important times in independent media history for us to say it's now or never. Let's keep moving forward and let's be that change that we wish to see in the world. Of course, there's also our Bitcoin address below as well as on the screen for you to scan if you please. And of course, we got events coming up. So make sure to check us out at anarchovegas.com. Anarchovegas.com. Use promo code WAM, that's WAM, for a 10% discount on your tickets. It's on July 19th, 20th, and 21st in, of course, Las Vegas, Nevada. That's anarchovegas.com. Make sure to check us out there and find us on websites like BitTube and Minds, and just try to support independent media, if not myself, any of the other big independent medias out there, to help us continuously bring our message to you free of charge so that we can really change the guard as we move forward into a dramatically polarized, crazy future. Let's try to make it as sustainable as possible. It comes down to you guys. You are the change you wish to see. You guys will help us get through these tough times. So anyway, check out all those links. And until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth. Be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.